Mining and materials company Afrimat has announced the planned acquisition of Lafarge South Africa. The deal will see Afrimat pay about 110 million rand for Lafarge South Africa, as well as take on its 900 million rand in debt. Afrimat has made various acquisitions in the bulk commodities area, as well as the construction materials sectors in recent years. Shares in Afrimat surged 12% in early trade and have gained almost a fifth in a year to date. Nastassia Arendse spoke to Afrimat's CFO, Pieter about the rationale behind the deal. Let's take a look.
It's a once-in-a-lifetime opportunity for a company like Afrimat. It will take us to a different level. We have been in talks for quite a while with Wholesome, and we've reached a point where we can do a deal. I think it will be beneficial to Afrimat. There's a lot of complementary footprint or geographical footprints. There's a lot of assets in this business that we're acquiring. So yeah, I think it's one of those deals that you only do once in your lifetime, probably.
Amid an economy which a lot of CEOs tend to be quite concerned about, the timing of this deal, was it always going to happen? Or if economic conditions would have deteriorated, would you still have gone ahead with it?
Yeah, I think the opportunity is the economic conditions created the opportunity. If the economy was booming, then the price of this acquisition would have been different. So I think the economy has created this opportunity for us. We think, as a management team at Afrimat, we think that the construction sector has bottomed. We've seen some green shoots coming out. There's a lot of tender activity. So we think we are at the bottom of the market and we're doing this deal at the right time.
Let's talk about some of these opportunities, amid a concerning lull, especially when it comes to the public sector's contribution to fixed investment.
Yes, we've seen some activities. There's some other construction companies that saw some growth in their order books. We saw some activity from Sanral. There's orders coming out from Sanral. So in our business, we also see some volumes increase in the recent months out of our construction materials business. So there's definitely an uptick in the segment.
So some analysts have described Afrimat as an aggressive deal maker, at least over the past 5 years. What makes a good deal? What ticks the boxes for you as the board? And what do you take into consideration when you have to make a decision, unfortunately, to walk away from a deal?
Yeah, we always look at what value we can add to the business. We're not just going to make a deal just to make the company bigger. We want to increase or grow the headline earnings per share, so add more value for our shareholders. And that is the first thing that we look at when we look at deals, is the price and the return on that investment. And you would see that in our results, and our current return on net operating assets, it's around 24%. So if we walk away from a deal is when we see that we won't get to that return on the investment, or there's some other risk in there that's going to hamper us to get that return.
So you've made the announcement via the Stock Exchange News Service. What happens now on both sides?
Yes, we have signed a sale of share agreement with Wholesome. So now it's all the legal requirements. We have to submit a Competition Commission application, as well as Section 11, which is the mining license transfer application, and then also the approval from the Reserve Bank, because the owner of this business is not in South Africa, so the money will flow out of South Africa. So those three are the outstanding conditions precedent for us to take control of this business, and that is only when closing will happen at that stage.
As you attempt to counter the economic impacts that are beyond your control, what remains the cornerstone of the strategy for Afrimat right now?
Yes, I think the cornerstone is that we need to remain nimble and react to the things that happen in the market. we need to be efficient in what we do, try and save and save on cost and seize the opportunity. There's still a lot of opportunities out there in the market, and everybody else are running away. We still see some opportunities, and I think this deal is also demonstrating that belief still in South Africa.
So in terms of Capex, speaking of that opportunity, are you seeing more acquisitions, or does it depend on what's available?
Yes, it always depends on what is out there. At the moment, we need to get this transaction down and integrate it into our current business on the construction material side, but there are one or two other opportunities that we all still see in the bulk commodity space.
Speaking of bedding down transactions, how have the other acquisitions been embedded into the business, the type of developments you've seen on that front?
Yeah, I think we've done well over the years to integrate all the acquisitions that we've done. You would see that over the last 10, 15 years, we've been managing our growth at 20% growth rate, and that's mainly by acquisitions. So we are currently still busy with one or two other acquisitions, integrating that into the business, but that's progressing well. So we are ready to implement this acquisition.
All right, as we wrap up, for the next 6 months, what's the focus area for you and the rest of the team?
For us, it's to implement this transaction. Like I said, this is the biggest transaction that we've ever done. The rest is on the culture side and getting the people of that business into our culture. So focus will be on the integration and implementation of the acquisition to unlock the true value that's in this acquisition.